Thanks for having me. Always excited to talk to you about regenerative finance. Last year I was here actually as a panelist. Now I have the pleasure to moderate and give you some perspectives from our very good panel that we have here. If you look at the pictures at the top, we are missing one person here, Katharina. She unfortunately got sick today, so if you're listening to this, Katharina, I hope you get well soon. Thanks, Nadine, for joining us so spontaneously, so we have a full panel here. I'm Max. I'm from the European Carbon Offset Tokenization Association, which is a very long word. We are an educator to the public, and we educate in and around the topic of carbon offsets. And if you go out this booth and look to the left, there's a very green roll-up. It's not as green as BNP Paribas. They beat us in that, but we did our best to make it very green. There's our slogan there. And it's using blockchain technology to decarbonize the world. And I want to talk to you, or our panelists want to talk to you about how can we use carbon credits to finance sustainable infrastructure. We only have half an hour. So for the introduction, left to right, 2-sentence max. Nadine, you can start.
Hello, hello. Hi. Thank you for inviting me so spontaneously. My name is Nadine. I'm one of the co-founders of Particular. We are a very young startup, and we are basically developing the first data platform and comparison tool for digitized assets on the intersection of sustainability and Web3. Yeah,
perfect.
Thank you.
Carsten Herrmann, co-founder and CTO of Green Trade. We are basically securing financing for new carbon projects. And we do this in a way that we are issuing forward credit tokens based on long-term offtake agreements and market them to corporates and also financial investors who want to generate a margin from the data stage sale.
I'm Victoria Jan. I'm working as a lawyer with Waldeck Rechtsanwälte. I'm specialized on banking and finance, and especially as regards crypto asset advisory and digital assets. And we are helping with structuring products and to solve problems with the structuring of these projects. So that's our core business.
And hi, I'm Lucas Terringer. I work with BlockSize, a company from Frankfurt that some of you may know on digital asset infrastructure. And BlockSize has a joint venture with a US company called Verity Tracking. We are a data traceability platform for sustainability, for energy markets, and especially looking at carbon emissions and native carbon tokens in that case.
Thanks for being on the panel. Looking forward to our discussion. Now, we talked a lot about decentralized finance. Also yesterday. Today we want to talk about regenerative finance, ReFi. It's a very tempting acronym, just like DeFi. Lucas, I want to stay with you, and I want to get to the carbon credits afterwards. So maybe you give us a big picture, what is regenerative finance and why is it so important for us?
Yeah. Quickly, by show of hand, who knows ReFi? Yeah, okay, 40% maybe.
Yay.
So think about it like sustainability and DeFi, or regenerative economies and DeFi. Combined together, we are creating ReFi, regenerative finance. So a lot of people are obviously looking at the financial market infrastructure today, and our capitalist economies as extractive of values. And I mean, when we look at emissions and natural assets, it's pretty true. So the concept of regenerative economies have been introduced for many years already. But the idea with ReFi is to use Web3 as tools for traceability, decentralization, and token economies to basically accelerate the introduction of regenerative economies, right? So we do DeFi, but we take into account not only financial capital, but also human capital, natural capital. We keep everything in balance, and we reverse the logic from extractive to regenerative economies.
And one of the use cases is carbon credits. Nadine, handing this over to you. Carbon credits, why tokenizing carbon credits? Why do we use blockchain to tokenize carbon credits? What value does it add?
Yeah, that's a good question. I think when we are, and that's maybe to start with DeFi, where we are like, when we look at the banking system, at least in Europe, we know that it's actually working. I can like get my money if I want, I can transfer money. So there's like not a huge pressure. But when we look at the voluntary carbon market, we see a lot of issues there. And that's where we think it's an actual use case where it really can bring value. using blockchain in combination, because yeah, when we are looking for different use cases, we see that there is, for instance, a lot of data coming together, and then you also have to structure it and measure it. And when we are talking about liquidity, it's also a big issue of the voluntary carbon market. And with those tokenomics, I would say we have like a more accessible market, and also a market where you can trade that easily and not over the counter like it is right now.
Carsten, you are building one of these businesses that use tokenized carbon credits. What is your take on why do you use blockchain anyways?
Yeah, I mean, in addition to the points Nadine already mentioned, we also have to consider new types of insurances of carbon credits. So we can work the first time with blockchain native carbon credits, and that means that the carbon credit is not issued based on the evaluation of a centralized entity like we have it right now. It's issued in the future based on actual data. So that means that, for example, a carbon project developer who works in the agricultural space, they are implementing IoT sensors to track how the carbon sequestration is working over time. And then carbon credits, together with self-fulfilling smart contracts on the blockchain, can be issued only in a moment when different thresholds or targets are being met. And this way, we have an automated database issuance of carbon credits. And this is on one side reducing the risk for the potential buyer. It's increasing the integrity, and also it gives the owner of the carbon credit, and this is not only important for the corporate space where greenwashing is a very big topic, this is also important for financial investors to actually track how the project is performing and to have all of this data validated on the blockchain. So in addition to tradability, and also the aspect of combining it with other projects or with other products like liquidity pools and so on, but I think this is more like DeFi topic, we can actually reach a completely different level of carbon credits by using blockchain validation and a database issuance.
You mentioned regulation. If I talk to institutions, very, very obvious bridge here, so don't worry about it, but we have a fully regulated market for carbon credits, at least in the EU. It's the Emission Trading Scheme, EU ETS. Victoria, I'm wondering for your side, if I talk to institutions, they always say to me, why do I need blockchain? I'm just going to buy the ETS. Regulatory clearance for tokens is not there yet. Let's put it like this. What is your view on the investment case for institutions right now of the market right now for tokenized carbon credits?
Okay, I think when you're able to structure a fully regulated product, which comply with all the framework which we pictured in our presentation, you have a robust product which can be attractive to our institutional investors, and that's the key point, I think, to bring liquidity in the market. So, and this is possible in the VCM and in the now embedding market, which we analyzed in a way and used it as a basement for our interpretation on what's going on in the market and how do we deal with the regulatory challenges. And when you're aware of these challenges and you're in this awareness able to structure a robust product, then it will be an added value to the ETS, I think.
Lucas.
Maybe just to add to that, because maybe one thing that we're saying, starts to emerge at the global level. Obviously, the EU has been always leading with a cap and trade market, which is the EU ETS that you guys were talking about, where we basically cap the emissions of big industries, and every year we reduce it. So they trade the allowances, right? So that's what you trade. There's an auction. The EEX does the global market infrastructure. But now we have compliance market everywhere in the world. China has launched last year the biggest compliance carbon market in the world, where a lot of traders are actually looking at taking positions. And since companies are trading and active globally, well, then you will also have, interoperability and accounting rules between an ETS and a Chinese, and then also a voluntary carbon markets. So when you think about it, I think also here the tokenization in the way that it can transport this regulatory setup could be really interesting. And we already see it. There are global exchanges, some of them which are registered in Singapore or Abu Dhabi. They are already starting to create blockchain-based exchanges and to trade tokenized carbon credits, which can play both in the voluntary and the compliance markets.
one point to add. I think the market is willing, or the companies are willing to enter this market, but there is not a robust product to purchase. This is the lack, and we have to fix that.
It's a perfect bridge to my question that I actually wanted to ask. So we made the bull case for it, right? So we talked about, okay, what are the advantages of integrating blockchain into the entire process? Now, if you look at the numbers, the market was at 2 billion in 2021. I don't know if it doubled in 2022, could be, but 4 billion US dollars, way too small to have a real impact on the entire economy. Carsten, I'm wondering, what is holding the market back? Why are we at 4 billion, and if it's had such great advantages in the entire value chain?
I mean, in general, when we talk about the VCM, of course, it's not only the blockchain-based VCM. So integrity and quality is a very big issue. And when we see what's happening in the media right now, or since beginning of this year, there's really a lack of trust. So institutional investors, but also corporates are really holding back because they fear that the project they are buying into is not really a good project. And there's also the question, what really makes a good project? So it's also a matter of a definition. And I think when we implement blockchain and data-based insurances, what I tried to explain earlier, we can mitigate that risk, and therefore we can allow much more capital to flow into this market. And also, for your question, I think the point of risk, quality, but also access. And I think access is the one point which are a lot of Web3-based companies in this space are forgetting completely. So in the past 9 months, I spent a lot of my time interviewing corporates who are buying 50,000 tons of CO2 credits and more per year. And it's very clear that they are hesitating a lot to buy into this kind of new kind of blockchain-based products, because the access is so difficult to access those new products. And therefore, we also make it easy for them to invest money into it. Maybe one of the forms is our tokenized green bonds, which is something that is coming up more and more, especially from companies based in Switzerland. And this is something where institutional investors are already familiar with what they are buying. But if we offer to institutionals or corporate clients to just buy carbon credits through a browser wallet, and they have to pay using a network token, forget it. That will not happen. It will also not happen in 5 years. And therefore, we have to make it in a more usable way, design it in a more usable way.
I want to say one more question at the business side of it. Nadine, you talked to dozens, maybe hundreds of projects. I'm interested in what does a good project do in your opinion?
Maybe also to add to that what Carsten also said, because we talked to like around 200 ESG experts and head of sustainabilities, and also asked them why you're not using those solutions, what is like keeping you away from it, where do you see the issues? And also what they say is that they have a lot of regulatory uncertainty. They're like, I don't know what I get when I buy those tokens, what are the implications when I do it, what happens after. Then there are also a lot of security concerns, especially after FTX. It's funny that it's also hit this ESG market as well. I didn't expect that, but yeah. And the third thing is all of those departments who are like taking care of sustainability problems in the companies, they are super young and super small. For instance, we talked to Sixt, and their ESG department just like was created last year in June, and they are just 3 people, and they said, hey, we just don't know where to start because we have so much to do. We have to do, calculating all the scopes, and there's one construction site there, and then there's another one, and then they're like, we don't know where to search for those solutions, and yeah, what is good and what is bad. And maybe to answer your questions, when we look at those companies, we look at different dimensions. We look at first on the company or startup side, like look, okay, where is those startup located? Is the startup, regulated? Then we also look on the blockchain, the technology component, you can say. We look, okay, what are the tokenomics? What implications does it mean when I buy it? Is it just like having access to, to a part of rainforest, or do I actually have an investment token. And yeah, and then the last dimension is the project dimension, and it's actually the most important thing, or the thing which is interesting for people who want to buy that. But because of the technology component, sometimes, or in most startups, it just disappears. So you see like all the advantages on the technology side, and when you're like, okay, but what about the project? Where is actually the project like located, and where is actually the impact? That's sometimes really missing, and they're hiding behind the DeFi application. And I think there you can say, or you can see what is good and what is bad when you're like, get those information actually.
And I think it's also the big topic about risk. So for sure, you have lots of projects coming up who are offering carbon credit tokens. But what will happen, actually, did they think about what will happen about like the country risk when the country decides, later changing the law, that carbon credits are not allowed anymore to be exported to other companies, to other countries, and they want to use it for their own offsetting? Or climate risk, or the risk that the certification is not going through. So there are so many risks involved, and when I see this landscape, and I think it's even over 200 companies and tokens on the market right now, I expect that there's a lot of thin air out in the market, and lots of them will disappear over the next couple of months or years. And our task is here to really find out what makes a good project, set some standards, and in terms of standardization of tokens, I'm also really curious what you think from the regulatory side. Because I think if we can solve this missing piece of the puzzle, then we really make it possible to invest for financial investors. And when I talked also the past couple of weeks to asset managers who are interested to go into pure carbon projects, that's actually a very big topic, because you noticed for sure that the whole ESG financing space really got bust in a sense, and there's a lot of trouble around now because those ESG investment products were not really green finance products, and therefore they want to choose like a pure carbon project or pure carbon investment, and carbon projects are a matter of a pure carbon project, and we just have to give them the right guidelines. And the most important topic that came up during my talks is how can the risk be mitigated? Who's taking the risk, and what is happening if the project is not going to be fulfilled?
Yeah. So I think it will link to your point on the regulatory. So what we're saying is that, okay, there'll be quality issues, but what we have seen about some projects that were trying to address it with Web3 and blockchain is, let's take a lot of individual credit and wrap them in a basket token, right? So one ERC20 token that will represent a bunch of projects. But once you trade the ERC20 token, you don't really know which credit is the underlying one. So some of them are bad quality, some of them are high quality. And we saw a lot of platforms, they just started, and I mean, it's normal, right? They were experimenting, and actually it's doing exactly the reverse than solving the quality issues. So I think we have to be very careful about like token from a design that the tradable, fungible instrument that the finance marketplaces want is actually still keeping the traceability and the uniqueness of the underlying climate project. Because otherwise we're not helping solve the first issue in the first place. And maybe I'll let you go through.
Very shortly to add to this, the goal to introduce blockchain technology into the whole carbon and climate space was to make it more usable and bring more trust in the market. And what you just mentioned, it's right, and it's happening a lot, that just a lot of projects are being put into one basket, and then a token is being generated. And this only leads to the result that there's even less trust in the market. Yeah. So those projects or those companies who have the goal to increase financing for the carbon markets, they're doing the opposite in this way, because they are only thinking from a technical side, but not also from the other sides, like the regulatory side.
Yes, but to add 2 points, I think the carbon credit-backed token could be an opportunity to mitigate these fraud problems we recognize in the market, because when the token is linked to real carbon credit, then there is a proofness in a kind of way to have a real project linked to that credit, because it's validated by Vera or gold standard. But this, yes, but we must took more trust in Vera and gold standard, and I think tokenization could help to mitigate these deficits at the registry. So to choose the right token and to structure it in a way that supports the tradability. So you need the ERC20 token to make it tradable.
Oh, yeah. Do we?
Yes. I think
What
so.
are the alternatives, right? So what we're talking about is like you have 3 different projects, right? Like a farm, a forest, direct air capture. They have different costs, but they all result in, let's say, single pools of tokens of 1 ton of CO2, right? And so what we are saying is, oh, if they're all 1 ton of CO2, what about we create a basket token, right, that represents all of them? Maybe there are alternatives with, you know, semi-fungible tokens, with security types of tokens, with partition of smart contracts so that we keep metadata of each project while creating fungibility. There are dynamic liquidity pools as well that companies like Talo are exploring. So maybe we need to think about all of that and look at the regulatory side for sure, but let you continue.
No, that's a very good summary of what I'm expecting, what will happen, because it's a market side, I think. I'm just looking on the regulatory side, and in my mind it's, okay, how to categorize that token and what are the implications on the regulatory side. So I think regulatory requirements could contribute to the standardization process we are now recognizing in the market. And I think the key point and the changing point is to provide us with a good standard and to have projects like particular and good products like you're structuring to give us a basement and yes, a basement of trust and standardization, and this will yes, accelerate this market and make them robust for the whole financial market.
So I said this is going to be a good panel, and I think the best time for this is if the moderator is not needed anymore, right? So, but let me ask one more question. So
we can stay here for a long time.
Yeah, it's interesting. Lucas, let's start with you. You mentioned this case with the 3 different projects that are integrated into one basket. Rings a bell for me in a different kind of, well, not in the best, in the most positive way. I think we had that with some mortgage-backed types somewhere around. So
Subprimes?
Yeah. So maybe is that really the thing that we want in the market? Is that really the way to scale the market? Is it pooling or is it something else?
Great question. And I mean, like if you look at the corporate perspective, a corporate, because right, they have a story, they have an ESG case, they want to know exactly and they want to be able to tell to their consumers, these are the projects I want to support, right? I'm in the food industry, so I want to support, let's say, farm-based carbon credits. So they would be really interested in this one, but on the financial perspectives, then you have to deal with many different types of assets. Maybe we create one asset for all farm-related credits, maybe one for all industrial-related, one for green hydrogen. I don't know what's the solution, but right now we're seeing a little bit of mix of both. Obviously, if we create NFTs of all types of projects, it's going to stay a fragmented market, and it's not going to be able to leverage financial resources like the way we should, because we talk about few trillions, possibly that needs to be leveraged. But what are your views?
I think pooling them is great if you're like coming from the Web3 space and you think about token pools and about leveraging token price developments and so on. But it's really not what's happening in the market right now when we look who is the buyer. And when you talk with the investors or the corporate clients, it's not even only the case that they're saying, hey, we only want to invest into forestry projects, or we only want to invest into direct air capture projects, whatever. So they even separate between this is a forestry project, this is also benefiting social infrastructure and biodiversity, and this is a project that is not. So you have to, on one side, corporates who are really picky about which project they want to work with, and you can imagine this only increased after the negative, or after it came out that even Vera certified projects are not always the best ones. And then even, and this is also something to think about, the project developer, he's also quite picky, because then you have a project, and I experienced it as well, who's saying, okay, we are not selling our carbon credits to this kind of bank or this kind of company because it goes against our inner motivation, you know. And then when you think about the supplier and also the buyer, they are so picky about it, you cannot put some projects in a pool and try to sell it. And that's why it's not working right now. So it's just a completely wrong type of product which is in the market right now.
So these problems are not unique to tokenized carbon credits, right? They are unique to credits, carbon credits as is, right? So I'm interested in, I know there is we have 1 minute left. We have 1 minute left. So let's take you one by one. I want to ask you, is the entire value chain of carbon credits going to be on-chain? And I know I have to pick some kind of year here. So let's give 5 years. And I want to start with you, Nadine.
I should say time or what?
No. Is it going to be on-chain? I mean, these.
I think it would be definitely. Let's not say on-chain. Let's say digitized, because I think it definitely should be a digitized process. I hope that blockchain will play a big role, or maybe also in combination. We see a lot of projects there with AI, which is also a growing topic right now, and something we haven't talked about yet. But I think it's really important. All the DMRV processes that always there, and and I think when we have a digitized flow, it should be there. And I think, I don't know, maybe we are in 2-3 years.
Yeah, maybe it's still a question for a crypto assets conference, right? But I see Marcel already standing up, so this is a yes/no question. Yes or no in 5 years?
Yes, it must be.
Okay.
I would say both, because we
Consultant answer, okay.
Yeah, both. And I also want to invite everybody who is not in the carbon space, but in the crypto space, to think about programmatic carbon offsetting for on-chain transaction, which is something as a new business model. We didn't have time to talk about it, but that's emerging a lot. And you guys can all contribute to it. Every transaction, every payment of a card, whether you're on Solana or Tezos or Ethereum or Polygon or whatever chain, that's something you can start to think about to make also your crypto product carbon neutral, hopefully. So.
But blockchains have to be green anyway in the future. So
yeah,
therefore,
well, exactly. But that's
it
the way
will come
to go.
automatically.
Yeah, we cut it here. That's the best, best ending point. Thank you very much. Thank you, Nadine, for jumping in. Thanks for having us.
Thank you so much.